Okay, hi there guys. G'day Peter. Just let me know if you can hear me. Just want to confirm that I'm coming through clearly. And then we'll get the ball rolling. Okay. Yeah, perfect. Right. Hope you had a good weekend, mate, anyway. Everyone's a bit more relaxed after the weekend. Not a bad Monday considering. G'day, Laurent. How are you, mate? How's your mountain bike going, Laurent? Apparently high seat and all. Doing a bit of riding, mate. It's good to see. Myself on my mountain bike and my road bike have been hanging up on the garage door, garage wall for a while now. Been trying to get out and do a bit of running lately. Fitness has gone downhill a bit, so it's the quickest way to get it out back up again. Running around after kids is not enough to keep you fit. All right, let's actually, in saying that, the last time I went for a ride was on the road bike, and I was doing a Yui. I had to wait for cars, but I was going that slow. As soon as I turned the wheel, the cleats in the bike, my foot was stuck in it, and I just fell over smack in the middle of the road as cars were going either side of me. Good laugh for everyone else, but God, it hurt my knee a bit. That was the end of the ride, of course. Started riding home crying. Packed my bat and ball and went home. All right, let's get into it, guys. Welcome to TradeSetup. For anyone that's new, thanks for joining us. Anyone that looks at it later on, you can just join us top left-hand corner at Twitter. That's our Twitter handle there. Top right is Facebook, and the bottom right, probably most important, just subscribe to us at YouTube. Yeah, me too, mate. I used to have a motorbike until I got married. I went over the top of a car, actually. Not a long story, but straight over the top of a car going through a green light, turned straight in front of me. So that's probably knocked it on the head. Now that I got kids, I think twice about it. Anyway, all right, guys. Yep, thanks for joining me again. Like I say, and trade setup in the middle. General advice warning also. If you just take a second just to read through that. Don't give any specific advice or personal advice. Anything we do mention is just our own opinions. Uh, and we'll obviously explain how we come about those opinions too. All right, I'll minimize that. So today, look, all in all, I thought it would be a bit weaker than that. We're down 22 at the moment. I think we're down about 40 to 50 points at one stage on the open. Would have expected us to probably be a bit weaker. Obviously, most people expected after the US on Friday they come back. I think it was a shortened session Friday as well. Let me just change the chart. A shortened session on Friday meant that it was probably a short and sweet type of a session. They still got quite a few headwinds, obviously we know that over in the US. They've still got the US dollar's sort of the biggest thing. They had a big rally um, on Friday night, and crude was sort of the one of the big things that drove the market lower, dropping crude down to $50 a barrel. So I think that's catching a lot of people off guard. It's just a momentum thing at the moment. I wouldn't be surprised. Obviously, we know what OPEC are like. Don't want to see lower prices too much, so they're looking to potentially, you would expect to drop output, cut output and cut production, mean to try to buoy these prices. And I think as soon as they do that, I think what it is, for me, the way I see the markets is more not just driven by the fundamentals, but people are going to ride the wave on the back of it. And obviously, it goes to extremes, extreme lows. They turn around and go to extreme highs. You never go straight to the average, the perceived fair value and stop. If fair value is above, it'll go straight through it and then pull back to it. Also, that sort of scenario. So if people are thinking US inventories are rising, so their output's rising. Obviously, they don't mind. For some reason, Trump doesn't mind the lower oil prices, but OPEC don't really want that, and obviously they've got to collude with Russia. If they think in fair value is 55 to 60, then of course you'd expect it to go through that. And I think it's probably because everyone's short the market. No one's really going to close out until something happens because you never quite know. As soon as they come out and said, okay, we're going to do this, we're going to reduce by however many barrels a day, then you'd expect a bit of a pop in crude. But at the moment, it is overcooked on the downside. Any new longs you'd want to be short-lived. as in you don't want to risk too much if you're going to go short into crude at the moment, because it could be, I mean, if it does, and when it does pop, it's going to be severe. I think it's going to catch it and be a massive short squeeze as the price rallies. Anyway, that's what drove markets down on Friday night. It's pretty much a $4 or $5 drop in crude down to $50 a barrel. That and a rise in US dollar, cost of debt. We've gone over these things a few times. Bonds rallied as a safe haven. So the US bonds, they dove back into bonds. Yields dropped. Generally on a rising interest rate environment, yields should be rallying, but not technically when it's more buying as a safe haven. They're just buying the physical bonds, sort of supporting price, even pushing them up. So as the market looks like it's going to tip over, equities, people are coming out of equities, they're happy to hold bonds as a safe haven, get the yield on that longer term. Potential from the keep going higher, it's all sort of up in the air, because maybe the US is coming to the end of the rate cycle, interest rate rising cycle, because they think we're more at parity now, which means, like we said, brings into question the next two rate rises potentially next year. Not so much this year. I think one's factored in for this year still, but maybe I think the US dollar unwound a bit because of the two next year that they were talking up, potentially not needing those. So the market's trying to figure it out at the moment. So that's why you probably find a good base in the US dollar, along with, we're not going to get out of hand on the upside either. But either way, what it's doing is higher interest rates means higher cost of debt in the US. Corporate earnings come into question. Are we at the peak of corporate earnings in the US? Meaning that why would you be buying it? Looking for higher earnings, higher growth, all that sort of thing. And that's why you're seeing this big pullback, what we're seeing. But what we're really trying to do now is gauge, is this over or is it not? Has it got more to go? So one thing I guess on the flip side to say whether it has gone enough or potentially gone enough is that, the US dollar rallying, is going to knock it on the head quite a bit now, that the fact that potentially no more next year means that probably we've factored in on equities. It's just really got to play out. But all these things are going to go through your head as you're planning how you're going to take this market. I don't mind the way our market sort of bounced the last couple of days, Thursday, Friday, and today, the fact that it's bouncing off its lows. So if we go to an intraday chart, this is what I've got here. It's only 1 minute chart, but you can see the market's pressed down on the open, and then since then it's just been grinding up. Doesn't mean you can see the way that's come off this high at 57 straight down to, dropped about 10 points, but it's gone from overbought straight down to oversold. So that's potentially another high low forming, and we could be starting to grind back up through 57. We just have to see how that goes. I think the 30-minute chart, you can see that's been pressed down from those highs at 59.40, down and tested 56 the other day. Did finish up off that level, which was good, and we've had a couple of rallies since then. Today, it's just, who knows whether we're going to form a lower high here and we're going to press down and retest sort of that 5600, 5650 zone, because that zone down there is what we've spoken about for a while. If we go back to the weekly, and a lot of people will be looking at this same zone where it's been a good part of a year of 2017, around 56 or just above 5650. Touching down that zone before we get a good rally. It's not a key anchor for me at all. The anchor was more down here, which we pushed through, but it is just a key sort of a support zone as we extended into that zone. Either if you're short, you're going to be thinking twice about, holding your short, especially the way we bounced off it really strong straight back to 59.50. You're going to be thinking twice about your shorts, and especially if we're starting to reject it a second time, even after this little flush through a couple of days ago. And that was that flush through, what was that, Wednesday? That Wednesday, we pushed through and then finished back up off that the previous low at 56.24. If you were short, in all honesty, you'd probably be thinking twice. I mean, it's not over just yet. We didn't break the anchor on that pop back up. But the fact that it's starting to, we're very early signs, starting to reject that zone now, I think is going to give the bulls a bit more comfort. And the bears, I mean, in all honesty, I think the bears are not colluding, a bit crazy. I don't like to think on one or the other, but if I was a bear and I'd been shorting it, I mean, for example, we were looking at shorting it here. If we did, you would have at least taken a partial. And the fact of the way it rallied that hard, if you didn't get closed out, and it would have been an ideal spot for our stop just above 56.50, we would have held that. Would have been feeling a bit nervous at one stage to give up a lot of gains. And the second time round, if we're starting to reject that now, like we said a couple of days ago, you'd probably be really having a tight stop. You wouldn't want to give too much away. If this is going to start bouncing, we're going to start popping up, building a high low, and then keep grinding over back up. It still looks like a weak market. I think it's got a lot of work to do. That's why I'm in no big hurry just to load the boat on anything at all. We did have a trade, I forget what it was, CAY, sorry, on Friday, which lucky enough it went straight in our favour, straight from the offset. It is holding up there today. But yeah, I think you've got to pick the quality setups, and it's harder. I'm really finding a good quality setups are harder to come by at the moment. There's some good weekly charts that are in pullback mode at the moment, and maybe readjusting, which because they're the weekly charts, they're going to take some time to play out as well. So you've got some time up your sleeve, and I think that's going to work its way through or with the ASX too. If that starts to find a bit of a base at 56.50, for example, we start to hold that, start to find it starts moving up in the next couple of days, couple of weeks. And I think, like I said, I think you're going to get some time. Even if you come on a bit late, it doesn't matter. It's rather be a bit safer and be a bit more certain that we're holding that level rather than start to bounce and you jump on board and we've just hold a lower high. Say, for example, you jumped on board Friday. Today, you'd be a bit nervous. If we do pop up the next couple of days and get to, say, 57.50 or so and then start to roll over, you do not want to risk too much on that because if it does turn out to be another lower high in here, off the anchor because nothing's broken just yet, that could be a good heads up that we're going to continue that trend down and take out this zone at 56 or lows at 56. From there, who knows where you're heading to? If we take out this clear zone here, there's nothing much until you get somewhere down 52, 50, or around 52, for example. So that's a good 400 point, 500 point drop at the moment. So if that's the case, you really want to be wary. You want to be certain that we're going to hold up around this 56 mark, 56.50 zone. Otherwise, to me, it's just too big a risk to start loading up. Does that make sense here, guys? So that's what we got our eye on. That's the Aussie market. Let's just look at, I don't think there's been much action on the Dow, if that's changed that much. Let me just check it out. Thicker charts here. Where are we? DAX, no, we don't want that. Dow. So that's coming down to that support zone there. I think, yeah, we were looking at it on the futures. I wonder where the futures are. Let me just check it out. I just want to see what it's showing me. I haven't looked at it. Yeah, no, you're right, Lauren. So I think all I'm saying is if we got a few ideas in our head of what we want to see, this is probably not such a great thing to see that breakthrough there. I mean, it could reject it and we could pop up, but we'd need a build. You wouldn't want to get much further down than roughly where we are. Does that make sense? Sorry, you can just hear the phone in the background. So yeah, you don't really want to get it through too much to sort of the 24.2. You want to see that bounce. I would like to see that sooner rather than later and see if it hold that zone. Otherwise, this is going to be a lower high, and then you'd extend from those highs to lows, take it from the high up here, and you'd be probably looking somewhere down to 23.4. Now, if that's the case, we've pretty much, that uptrend has been broken, that longer term uptrend, and we're correcting that longer term uptrend, which could mean that we go sideways. We could hold up here, but what it's going to mean, it's going to be a tougher market to trade. The highs are in place. We may just range trade. I mean, it's a big range, but you can still range trade between here. There's going to be opportunities, but you have to be a lot careful, especially if we start to hold that break down on the Dow. This is the Dow futures on the with a weekly chart here. If we sort of break down, we start getting through this zone here, 24.2. Yeah, then we're looking down to 23.3, 23.350, 23.4. Good couple of hundred points down. That will be pretty much confirmed that this uptrend is broken. So, look, we could be doing that right now. We just have to wait and see how it plays out tonight, the next couple of nights. But I'm kind of given some solace by the way our market's holding up today. We're down 30, I know, but the US, I was thinking we're down about 30 to 40 on the open, and we pushed down a bit lower and we bounced a bit. So, see what happens coming into the close. What else we got here? Dow, S&P. So the broader market is, I think that to me, that uptrend, if you draw that out, maybe it's broken already. So it might be a different story on the S&P. Let's just get this up. I just want to put one line in to see what's happening here. If that's your lows through here, yeah. Okay, so that's a bit of a different story. That's looking like we're broken. We've got the next support zone at 25.50 on the weekly, and we've washed out these highs, so we're going into corrective mode. Whether this, a lot of times the US can correct sideways. It doesn't mean that it's going to take out those lows just because, we're correcting. It could mean anything. It could mean that you've got to sit back and wait, really. Wait to see what the US does. So the S&P looks a bit worse off than Dow, I'd say, from a technical basis, which would mean, I believe, they've just got a bit of heat to come out of that market, clean a few of these late buys out, chop around a bit, and then they're going to have to sooner or later reset themselves. And we just want to try to anticipate where they're going to reset themselves anyway. So what else? We've got the DAX. Just want to see what they're doing. The markets, and that's pretty much heading south. That's on your weekly as well. Not looking that great on the DAX and the FTSE. Same as potentially holding and building that lower high there. It's going to take out these lows at say 68.50 and press lower. Longer term charts, yep, we could be in for this type of correction. We're talking a few months now. Good part of could go through another 6 months or so. If that's the case, we start to project down on the FTSE, for example, and we have to hold these lows at somewhere, give or take, around 65. But it's going to take a few months to play out, a few weeks. I say weeks to months, a bit more than that. But we'll see. So the picture's not so great. It doesn't mean that just because these other markets are looking a bit rough, that our market's going to tip over and go straight through that 56 mark down to 52. We just have to assess it as we go. We have to assess the global picture, what's happening with China and the US. Maybe they're going to come to some sort of agreement, sort themselves out. And I'd expect that's going to buoy us. But I think at the moment we're in a bit of a holding pattern. We're sort of just following the US around a bit because we're not getting too much leads from anything else. There's still the headwinds there. The Aussie dollars have been backing off a bit. It's actually been jumping around quite a bit, up and down like a bit of a yo-yo. But the US dollar rallies, we go down. It's not doing too much over to our overall market, but I think a lot of it's going to be if China and US start to work their issues out. That's going to affect us a bit better. It's going to affect us a more positive note, and we could, if that comes out in the next week or so, then yeah, we should be holding that. You'd expect holding that 57 mark, 56.50 zone. All right, any questions there, guys? And might just rip into it. I'm not, like I said, I'm not seeing too many. This is something we alerted today. TPM. That's not looking too bad. That's your weekly chart down in the bottom. Just go through a few charts. That's the weekly chart there. It's had a big sell-off at the start of into 2016. Held the base and started lifting. We were looking at it, I think, somewhere around here for a bit of a lift around June, July. Unfortunately, just missed that little pot from $6 to $9. So you can call me stupid if you want, but pretty much missed this high low here. That would have been a cracker through there. You would have got that sharp rally. What we're seeing the last few months since the beginning of September, those highs in August, is just the market contracting, and that's not bad. You can see the way that's sort of, bit of a pullback, some profit taken locked in, bit of a grind back up. You get those people that missed it, fear of missing out, they're trying to buy it back up, and it's been grinding back out. But this whole price action is a bit of a grind compared to what, happened pretty much in a couple of weeks. So the rally from about 550 to, above 950, good part of about a week or two. And then we've spent the last probably 3 months just contracting off those highs. So that's not a bad sign. I'm not minding that potentially for a bit of a pop and getting a secondary leg higher. And that could take us back up to the highs around $12. It'd be nice just to get through 9, those highs at 9, but that could easily just start to hold. I think looking at that weekly chart, everything's sort of in that position. You're pulling back to the MAs here. You're starting to bounce off those MAs on the weekly. But we need to just drop it down to the daily just to see if we can get that price action. Okay, potentially lift up through, what was it, high 793, lift up through there, pull back to build your higher low on the daily. So we've got the daily working in our favor, the potentially weekly working in our favor. We're on the right side of the market. We're seeing it lift, and then see if we can ride that up through 9 and see if we can ride it up to $12. But that's going to we just have to wait for a bit more confirmation on the price action. There's no need to buy it here. I mean, this is where I think you've got to be a bit more, especially in the current market conditions, a bit firm and a bit rigid on your entry setups. Just stick to them. Don't try to swing and, don't think, I haven't had a trade for a while. Like we've only got 3 positions at the moment out of 10. I could be sitting here thinking, look, I'll anticipate this because I've got to build the portfolio up a bit. I've got to be doing something. We're at a good base. All these things start playing in your mind. Let the market prove it to you rather than jumping in thinking to anticipate it, because this could just as easily doesn't confirm, rolls over, and then before you know it, back down at 550. The market's, has pushed through the 5600 market. Things are capitulating. If it's going to do that, when fear drives the market down, they don't care about fundamentals or technicals. They'll just blow through support. So you don't want to be into the market trying to anticipate what's happening. If the market's going to roll over, you want to make sure that these setups are primed, they're playing out, and just sticking to your entries and your setups. I mean, if that does set up for me and we get it, I'll be happy to take it. Obviously, it could be that if you've seen this market tip over and it's starting to capitulate, it's going to be a tougher entry because you know that it could just get you in and it goes about 1% and then turns around and retraces on you as the fear starts to grip even people that are buying it into a prime setup. Okay, so you just got to be wary of what's happening in the overall market as well. But I think if nothing much is happening, we look like we could be finding support. And this sets up, yeah, you've got to honour it. You've got to jump in because nothing worse than seeing you're right. Everything was right, but you just didn't pull the trigger and the thing took off. It's just as bad as being in something that goes down. So that's just the nature of the beast. So I think it's we're just trying to plan ahead and take the prime positions. But at the moment, I'm not seeing a hell of a lot, but I don't mind. This is TPM, not minding this at all. What else we got? There's not a hell of a lot else. That's CAY. That's a trade on that. You can see that grinding lower. Go back to the weekly, actually. The weekly's a good one. You can see it's just spiking up. Grinds a bit, spiked back up. Grinds, build your higher low off these lows around 4 cents. Really took off through 30 cents and had a good little retracement. On the daily, we're looking for that to break. It did. We're in. Got our risk tightened right up to 21 cents. Not risking a lot on it, so we'll just see how that goes. I want to see if we can get up to 30 for a partial and then just go from there. It's looking a tad stretched on the daily, but there's nothing to say that, like here, we first hit stretched at around, say, 25 cents and got up to 31, another 5 or 6 cents higher. So we can get another 5 cents on this, there, then we got our partial. And we'll just reassess it from there. I can't think of what else we got here. RFF, that's another one. It's hovering around those highs at 225. I want to see it did break it on Friday, but I want to see that start to kick off. There's a few sellers sort of knocking it down, and then it gets bought straight back up to 25. It's still trading at 25 now, 225. We were in at, I think, 217. RFF 217. So we've got our stop around 215 at the moment. Could lock it in at 225. We'll still be below this potential high low. Now, this is something I don't normally do. I'll put the stop below this high low because that structure looks quite good, ready to pop. Now, if it doesn't, I'm wrong, and there's a good chance if I'm going to get this wrong, I'm probably going to get stopped out at 210. I'd rather make it higher because if I do get done at 217, I think that's just going to continue lower because that structure is actually quite nice, and the weekly is solid as well. That weekly structure is solid. I'm just expecting that to pop up through 230 and trade up towards that 240 mark where we can take a partial on that as well. But yeah, I don't mind, especially the environment as well, not having too much risk on the table for too long. If the market was really bullish, overall market was bullish and everything was going great guns, then you could afford to give it a bit more room, a bit more complacent on it. But I think the way the markets are, you don't want to, if these shares are not going to go, when you've got fear just sort of drifting around the market and we could sort of topple over at any time, you don't want to risk too much on a trade. Because don't forget, if you're out and you're wrong, you can always get back in. But if you're in and you're wrong, it's going to hurt. It's going to hurt your bank balance. So yeah, that's it. Now the other one we've got is BXP, which is behind the 8 ball, which we got done at the high. Probably a bit more of an aggressive entry, but it was good little blue chip. Just popped us in straight back down again. It's still holding that 1020, and I don't mind the way it's sort of grinding down the last few days. If we're going to get stopped out, we're going to get stopped out, and we're not risking too much on that either. It's not a big one anyway. Tighter risk in percentage terms. So if that does roll over, okay. It's the weekly that, you can see that weekly, it's pushed down, touched on this level, even got that big washout at $9, and then we banged straight back up through the anchors, took out quite a few lower highs, which is a very positive sign. Now this 1025 zone will give or take just through, say, 1020. is a good little zone where you would expect some buys to come in. Now, if they don't and we get chipped out of here, okay, we'll just reassess it as we go. And like I said, rather be out and be wrong and get back in than be right, don't get out and get hurt. All right, any questions there, guys? Anything, if you want to, Lawrence put in a few AWL, TWG, CGC. Put in anything else you want to have a look at, and then we'll get stuck into it. If I just going to quickly flick through these charts, see if there's anything else that takes my fancy. Now this one, this is Dexus, don't mind that, except the weekly's more sideways price action, so it's a bit, it could suck you in if you're jumping in here. This is not really in a good healthy uptrend. I think as soon as we got through these highs, the previous highs on the weekly especially, the highs from, was it back in 2017? We got that in September. It's pulled straight back, so it's not convincing breakout through the highs. You'd rather see a convincing break, a good pullback, your first pullback, you're in. And then you know that that's going to go pretty hard as people, that fear of missing out grips. So that's slightly different price action. It's not looking too great. It's getting extended on the daily. Not a bad position the weekly, but I just don't like the deep pullbacks that it's seeing. But I have got my eye on that. That's BGA. There's nothing else that's really. What was this one? CQR. It's not too bad. All right, we'll get into it. We'll draw up some charts, and what I'll do, I'm going to do something new. I think I'm going to do something new. I'm going to type the actual code that we're looking at so everyone knows. Now this is ALL on the short side, looking at ALL. Yep, mate, on the daily, just probably don't need to look at this too much. Aristocrat, it's definitely heading down. If you're on the short side, you're on the daily, depending on where your risk is. Laura, I don't know where you get in, where your risk is. You're on the right side of the market on the daily. That's it's gone past a bit of a correction on the weekly to being actually downtrending. If you go down to the weekly, that's quite a decent. When you start getting through these MAs, we probably should have held up. I'd say somewhere around lower 20, say $27. Now, where was 27? Around here. So this little pop down. As soon as we got this push through, you can see from this little high at 30, say 29.50, we've got through 30. You would have expected it to start holding up here at $27, and that's purely because you want to see things like it's bouncing off the MAs, which it has. It's held the MAs all the way. If you can go right back, you go right back on the weekly. Pretty much held those MAs. I've got a 20 and a 50 exponential moving average. It held them nicely all the way up and kept lifting. So you had some more than enough opportunities. This is the first time we've really gone through those. So you've got to question why, what's happening. Is this the first signs of, and the reason why you're going to get these deeper pullbacks is one, we're just running out of buyers. Anyone who wanted to buy is potentially in it, knowing you also know the global outlook as well, as things are slowing. So to find any new buyers, we're not in the right type of environment. I wouldn't expect to find fresh new buyers to jump in and start buying up at the $30 level. Don't know anything about the fundamentals. Could be overcooked at the moment, overvalued. Who knows? But you can just see from the chart, as soon as you get through those averages, and it's looking like it's breaking down that trend, that uptrend. It's just running out of buyers, and then you're going to start getting profit taking, which every time you got profit taking, met with some buying, here, met with some buying, some profit taking here, this little pop up, met with some more buying here. This time it's not really met with much buying. It looks like you're flipping over from more people wanting to buy to sell, from more people wanting to sell now than buy. That makes sense. So you get it next little push through. So you're on the right side. It could be getting extended on the downside in the weekly. We sort of looking that way on the daily as well. But yeah, you're definitely going on the right direction there anyway. So if you are short, just remember on the short side, I think it's more prudent to have tighter risk than on the long side, because if fear grips a stock, or it starts rolling over, you get on the short side, fear grips it, they don't really look back. It's just going to go. You don't get these. It should go hard and fast. So normally, I think the time spent going down is a lot less than the time spent going up when it's rallying, as opposed to falling. So shorts are generally a lot harder and faster. They don't take much time to play out. And if it's taking too much time, you've got to start questioning what's happening. Is there buyers starting to edge in? We're starting to find support. So yeah, either way, you're on the right side on the daily there. If you can just make sure to tighten up your risk. Where'd you get in, Laurent, on these anyway? Just let me know, mate. We'll get on the TWE then. Alrighty. TWE, it pretty much looks the same. The good thing about Treasury, it has been going up. If we go back to the weekly, this is definitely, it's in a downtrend. You know, that could be a massive correction. We don't know. Um, Not in yet. I'm looking at going short in these. Okay. Telstra, we'll have a look at that. I'll be kicking myself for a long time on Telstra, aren't I? If you go to TWE, again, you've just got to remember, once we start heading down to this zone, it's not like it's going to be anything new to people. They'll look at this chart, oh, what TWE is going down. It's pretty clear, and it has been for quite a while. So if you wanted to get out, you just got to question how many people, if they want to get out, how many people have got out, have exited these long positions. But you can see that's definitely broken once we've pretty much got through those lows. 16, off a double, essentially a double top there. And you can see the way the price action changed. Look at this price action compared to what's happened previously. You've got a couple of good expansion days up. So always take note of these candles. You've got it here, you know, a couple of good days here, a couple of days here, a couple of days there. You got a couple of days here, but then it started chopping. You know, you got this sort of chop on this grind up, which was a bit different. Whereas when you get this grind up, I'm always suspect of that. I'd rather see it pop up like that, pull back, pop up. So you want to see this type of action. You know what I mean? That's a fair bit different to me um, than what we're seeing, especially when you come off so hard. And look at the way it's come off. So if you were looking at this earlier, I want to flick down. Am I on a daily or a weekly? I'm on a weekly. I want to show you something. I can only see sort of one spot which you could have really preempted it. And this is just trying to piece all the pictures, all the pieces together. But if you're assessing this and you're thinking, if you were thinking anywhere in here going long, okay, it's worked out. I mean, the earlier the better. But if you're getting late into that trend, even if you're about here, you're probably going to say, look, if I'm going to go long here, I don't want to be risking too much. I'm not going to have my stop too loose. I'm going to have it nice and tight because we are getting a bit long in the tooth on that trend. Um, Anyone that wants to be in is probably in this share and holding. Otherwise, you know, to keep going, it's got to keep dragging in more and more players into the market, more fresh buying, and starting to load up. Otherwise, you know, everything's got a time limit before we get profit taken into it. Every stock, and you just got to you're trying to anticipate. Anytime you're trading, you're just trying to anticipate when. All right. So if you're buying here, they're the first ones to get squeezed out. You know, you've got to break through the anchor. That's if they were holding their stop in the right spot, in my book anyway. And you can see the way it come down. So this is sort of your first cracks appearing. The way it's expanded down. You got this rejection on this first red candle. You can see. And then the second, it just capitulated, bang, straight through the anchor to about 17 bucks, traded down to 17, then started lifting. So if you were looking at it here and you were going to go long in here, would you really want to go? I mean, it didn't set up for me anyway off that weekly. Didn't look good. I'm always taking note if you break the anchor, which we did at 17. And I'll draw this, I just want to clear this actually. I'll start a fresh chart. So first thing you broke that anchor. So if you're looking for the trend to go up, you're looking to follow it, you've got to question, okay, we've broken that anchor and that's come off, you know, we're 20 bucks, a couple of big candles. So that's not looking good to start with. And then I'd be questioning this. I'd always be questioning what's going to happen. I tend to steer clear of these all the time, especially the fact that it's been so long. What is that? 2016, say 2015, mid 2015. So 3.5 years, give or take. It's been going up. And then you get these couple of candles down. That's your first, you haven't got that before. And anything that sort of, you know, we had a little one here pop down, buying, you know, a green candle. It's getting soaked up quite easily. This is the first time it didn't get soaked up. It went straight through that, you know, a little minor anchor level. And then after that, you got this grinding price action straight back up again. You can see. So the first thing I'd be questioning, okay, are we really going to continue on long? Or, you know, it has to have a good correct. So if I get that sort of thing, I'm looking more for that sort of corrective action on your weekly and then looking for a long. If I want to go long, so guys, just 1 second, that'll stop in a sec. All right. Yeah, so you can see that price action on weekly is really, and when you start to grind like that without having a pullback and then resetting and going again without a pullback. So that's your Dow theory: up, down, up, down, up, high highs, high lows, high highs, high lows, all the way up, break a high low, start to grind. I'll be very skeptical. So that would be my first heads up. I'm going that I'll probably either exit along or look to go short. Now, if we just go to the daily, I just want to see if we can pick out that entry. So on the daily, just remembering everything I said, that you'd be looking potentially short. I mean, in all honesty, I missed this completely. I wasn't even looking at it, but so that's your somewhere around here is like your support coming up. So this is that the anchor level, that first break of around $17 with this push down here. You've got your highs already in place, and what you've done is gone all the way back up with this grindy kind of price action. Here for me is okay, it's not showing the right kind of price action, right structure to go long. You're getting this grinding kind of price action. You've got a green candle. It's actually originally popped down, took out a minor support level. So it's just clearing the way, clearing, grinding back up, clearing, grinding back up. But all that is not the price action you want to see. It's completely different to what we've seen in the past when there's buying, not euphoria, but you know what I mean? There's just that buying enthusiasm. Whereas now that's changed. That structure's changed. The way it's reacting, you know, comes up, straight back down, comes up, straight back down, comes up, straight back down. You know, that sort of price action compared to going up. As soon as it breaks level, it's off. You know, we get this rally off. Pullbacks are really shallow, whereas these pullbacks of this leg up, even this leg up, 50%, 60%. This pullback, 50, 60% or so. Same with these, you know, all the pullbacks are deeper. You're getting deeper of those actually legs up. That makes sense. And then you've got this tipping over here. That would be a bit of a concern. You're starting to break. You've got these wicks in here. Oh, potentially, you know, you could have had a little short through here. You know, you got your lower high, you got the MAs crossing the daily, and all that goes to supporting your weekly. You got a double top you're working from um, after grinding. So if you are long in here and you haven't been pushed out, squeezed out yet, as a short trader, the way I'm assessing it, this grind up is not looking positive. You've got a double top. We're starting to fail off that double top. There's going to be a lot more people that have held it for the last 2 years, say, that are ready and watching the same price action. Instead of holding it, they're going to look to get out now. Potentially, they've seen all this price action going on, or something's not right, and they're watching it grind back up. They're starting to feel unconfident about holding that trade, and no one wants to see your gains start to evaporate. They are now looking to potentially, okay, let's just get out. And that's why you get this secondary move down gets a lot stronger, as opposed to something like that. That first initial thrust, it's hard to see coming. That's just anticipating if you get it out there. And you don't want to do that. You want to be proven wrong. And as soon as you get that, it all started really with that breakthrough of that 17 level. So as soon as you break 17 and you're long, sorry, let me retrace that. As soon as you break an anchor level to an uptrend and you're long, you've got to start questioning what's happening. You've got to be watching closely, especially if you don't run the stops or anything like that. Um, if you just have a theoretical stop or a stop in mind of where you want to get out, or an end of day stop, however you run it, as soon as you break an anchor level, you've got to start questioning what's happening. Is the overall price action changing? Has there been a shift between buyers and sellers? What am I going to do if we start to see some weakness? And if you're long in this, I think that's sort of your first start. The cracks really starting to appear. Firstly here, and then over here, that's more confirmation. You're coming off, we're grinding back up. We couldn't get back through the highs. And just remember, if we were strong, if that price was strong and it was going to go into new highs, it should have done it. It's pure and simple. It just should have gone up through $20. Instead, we get that failure. We got a little pop up here. This area would have been a bit harder to trade short, but I think maybe this area got a bit of chopping sideways, and then you could have taken an entry through 17.25. Your stop's just above 18, and then just see what happens. You got to push down, retest the breakout zone, straight back down, and then it's just continuing down from there. Does that make sense? That big, long-winded, but I think it's always important just to analyze. Just take your time. Even if you snapshot this up, it's probably worth taking a picture of maybe the weekly charts and just drawing up what I said, early warning signs. So you get used to seeing some early warning signs and write up some notes of why. Why is this potentially going to rot? Why is this weakness? What's happening between buyers and sellers? It's hard to know what's happening, of course, but you're trying to interpret the price action as a bit of a heads up to what's happening overall, and write a few notes on the chart. Maybe do the same thing on the daily as well. I normally do the weekly and the daily, so I've got the bigger picture. So next time, if I see this type of price action, it breaks to the anchor after a big uptrend, oh, what's happening there? Maybe going short. The same as what we saw, this looks a lot better than it probably is, on Wesfarmers. And that was a very similar, if we go back to the weekly, you've had this little pop up here. You've had a good strong run up. If I go to the daily, from 40 bucks. Yep. So we had this good strong run up, and it looks a bit better if you take out these last couple of days, which we could probably do that. Yep. So you've had a good strong run up here. And if we mark that up, it might have been a bit more aggressive, but I'm assuming we're seeing the same type of price action. It's probably a bit different here. You've got, as soon as you get this breakthrough, and that's your anchor there in my book, you got this pop up, it accelerated, pull back, bounced off the MAs, did everything, but built your lower high, and you got a lower high in this instance, and then you got to break through that anchor there. I think we went short. Actually, I think we went short through there, 50.35 off this. Then you've got this pretty much lower high here, lower high coming into play. You've broken down through that. You've probably broken the anchor, essentially tested that anchor. You're coming off another lower high. We traded through that anchor, but it was after it's broken. It's broken that uptrend and just traded short. So we just got the same sort of thing. We've anticipated that. We know where the anchor is. We've marked up on our chart, and we've got similar type of price action as what just happened, what we just showed on, what was it? TWE. All right. So yeah, I always think it's really worthwhile. I mean, if you're trying to learn your charts, you're trying to learn a bit of price action, is just get in the habit of just having a file. I've got a bunch of charts, so it's saved on my screen. It could be the euro, anything. When I'm trying to learn a market, I'm trying to get used to their price action. I'm trying to see what's happening is break the anchors, and it's always in terms of anchors, trends, what's happening, getting squeezed out, who's going to be under pressure first? Is it going to be buyers under pressure or is selling under pressure? What's the trend? And just marking up and putting notes on it. So what it's doing is reinforcing that sort of picture or that price action in your head. So next time, if you're at this stage here and you start to break down, you'll be looking at it going, oh, that doesn't look great, and mark it up and go, oh, that looks like a short, and jump in and short it. Or just get out if you're long, or look to really tighten up your risk. So yeah, that's my two bobs worth anyway. Let's go to CGC, Costa Group. The daily doesn't look like anything at the moment. I'll have to go down to the weekly. And just, if this has been a big uptrend, just take note, we've got a little double top, essentially a double top through here. It's popped up, pulled back, built a higher low like it has in the past, pushed up, failed at the highs, and then the rest is history. We had smack down here, took out that anchor level at around 760, and then proceeded to go low. So the one little, just by looking at this price action here, from what's happened, you've had one leg, little pop, secondary leg lower, and then you've got this big expansion candle, that big green candle, it's popped up. So it's going to start to, if you're thinking of a short, you might just want to question, and it's all going to be in context. We haven't looked at it yet, in context of what the weekly is showing. Yeah, so it's not actually the weekly is not showing a hell of a lot, to be honest. As in, if you marked up purely on that weekly, let's just mark up that chart there. Now, if that's your trend, look what's just happened. It's probably your first pullback after we've broken down in that trend. So really, just what I said about that daily. So you had one move pop up, and actually it wasn't, was it? That's essentially a double top. Let's just mark that up properly. We're sort of marking that up as a double top, essentially, 875, $9. So from there, you've had one, two, that's your two moves down. So then maybe you'd be questioning that on the daily anyway. But that's just taken, what that's done is really just broken this downtrend. So this could have easily just popped up from here and started to lift again and rallied back up to the highs, and on you go. But instead, it's the first time, it's taken us two moves to get through this support, this rising support. So that uptrend is correcting. Okay. So if we're correcting that uptrend, what's going to happen? Have we done enough flushing out from those highs at 875 down to $6, which potentially, because the market got away from itself, look here too, it actually did two moves down and then started rallying again from there. But it didn't break, this trend line. It touched it. It just sort of touched back on it. So if we were going to do the same thing, you would have expected it somewhere to here, hold that minor support zone, and up we go again. But instead it broke down. So that's from your weekly, it's your first sign of potentially we're going to get a correction. But then it's all about how far we've already moved. Have we cleaned out enough of these buyers? So pretty much anyone that's bought it above $6 was feeling the pressure at one stage. Anyone above $7 from 7 to 8.75. So probably a lot of players in there that have, if they're still holding, they're underwater. Only slightly now, but they were much more underwater at $6. So if we go back down to the daily just to see, okay, if we haven't squeezed out enough people, and this is your first, so you can potentially take this as one move off the highs, is this a good zone to have a secondary move off the highs? And where's that going to take us? If you take it from, say, 8.75 down to $6.75, somewhere from 7, 6, what's that, 5.25, which could take us, say, to 5.25, which pretty much brings us in line to that anchor level. So there is, my math is probably wrong there, isn't it? 8.75 down to 6, that's 2.75, so it takes us to 4, which really there's nothing really in line to 4. If this is going to be a secondary move down, is what I'm saying. So all I'm trying to do is assess how many people have been squeezed out with this move down, how many longs have been squeezed out, has there been enough, is it worth a short, and of course flicking it down to the daily. Now the daily, I don't like this green candle, to be honest, and I don't like the way it's actually retraced. I would have expected from this little pop up to around 660, you got a couple of red days, I would expect it to build a lower high from there and then go again. But instead, we pulled back and went bang, just blasted. What it's done is just squeezed out a few short traders. So I'm not too confident on that. And if you just mark up this price action, if I wanted to go short, this is the current leg, this leg up here you're going to be looking at. And to break out of that, that move up there, we've got a long way to go down. Potentially got to break through 640 from 680. It's 40 cents. I'm not a big fan of thinking that's going to, it's going to drive down through here and then pop up to build a lower high for me. I'm more inclined to think that that's just going to touch on that, and we're going to start to squeeze some of these. Potentially whoever's shorted in here, going to start to put the pressure on. And don't forget that leg down, we've retraced a good part of 90% of that move down to 580 with this pop up here. Does that make sense there, Lauren? Does anyone any questions? Just all I'm trying to do, I guess, today with these last couple of charts is piece together what you would be looking for in a trade. And it's like a story, you got to piece together the story before you get to the ending of what's going to happen in the final conclusion. The conclusion is going to go up or down, and you're just trying to build the evidence to support. Should I jump in long or should I jump in short? Is it a prime setup? Is it not a prime setup? What is my risk? And as soon as you know what your risk is, then you know exactly whether you're going to buy or sell it. And you obviously got to know where your risk is on every trade. If you don't know where you're going to be proven wrong, you really shouldn't be jumping in to start with. So yeah, and that's what all you're really trying to do. And then looking at it, say, okay, if this sets up and my risk is way up here, is that too much risk for me to throw up a trade when I only think it can go down? I think it might only get down to 560, for instance, and I'm taking $1 risk for 60-cent gain. I don't think that's worth it. So then I'll just skip it. I'll pass on it. And that's what I'm trying to do. It may take a bit of a while to set up your chart and a while to just put together your ideas or your plan. But I think it's really worthwhile going and just marking up things and what do you want to see, what do you want to see happen, what don't you want to see happen. And if that happens, you can get out and leave it, forget about it. All right. Let's have a look at Telstra then. God, now that annoys me. So anyone that doesn't know, we're looking at shorting this. And then I thought this was going to squeeze back up again and really catch a few people that have been looking at the weakness in this for a long time, watching it weak and then starting to short it and squeezing them back out with a pop instead. So we flipped over from looking at it as a potential short to looking at it as a potential long, now to rolling over. So, we're not short on this one. Would have been nice to see that short of around, I think it's 297 or so. It's down at 286. It's only 10 cents, but still. There's some definite weakness there. Now, don't forget too, if you were short, even if you got this right, you got to know where your risk is and what your risk is. On this, your risk is a pop. It's quite clear, it's come down. Don't forget, everyone loves Telstra for some reason. Dividend investors, whatever it may be. If we start getting the market finding support, the overall market, the ASX, the US, and everything, this could pop just as easily because it is down on its knees pretty much. You're going to have to go back down a bit. So we've traded down towards that 250 mark. Traded here, big rally over a few years, come straight back down into the zone. We did react last, there's been a few months we reacted higher. Was it a few months? No, it's a few weeks, isn't it? So really a few weeks we popped up and we're starting to head back down. So we could easily fall short, start to hold a higher low in here, working off this 250 zone. We start to get some buying support, then up we go. Doesn't look great on a daily or a weekly. I mean, there could be this accelerates and tests 250 and goes straight through it. So at the moment, if you're short, which I think you are, Lauren, it's worth holding for sure. Just knowing exactly where your risk is and where potentially you're going to take some partial, take some profit off the table. Good short though. Well done. Bugger, we didn't get in. I hope you're not trading my idea, mate. I didn't get in. Good on you. All right. We spoke about this, didn't we? NXT. Little washout here of this previous high, and it looked like it could continue on down. The weekly, it has on the short side, it has had a bit of a push down to 7, little pop up, bit of a washout too, then capitulated again through 6. Then we started getting some sideways action, bit of consolidation, washed out that previous lower high at 667 on this little candle here, on the weekly candle. And then we're heading south. So if that's going to continue what we happened before, we should be moving down quite strong. So just remember, if we don't move down strong, okay, it could be the end of the road on the shorts, and we may have a deeper correction. And it might just be working out that the weekly is going to, who knows, it's going to start holding a base, we're going to hold a high low and then take out 8, or we're just going to sort of start grinding back up, find some more selling pressure at 750 and have a lot deeper correction. But you don't want to sit through that if that's going to be the case. So you really just got to know exactly where your risk is. For me, if you're short from up here, fine. You probably, I wouldn't ever have a tight, a really loose risk level or stop on a short for sure. I'll be running fairly tight on those. But yeah, if you're gonna, by the look of this, you're probably gonna have your stop. In all honesty, way up here, because that's the last time, that's your last lower high, or even you can have it at 670 or so. But to me, it just seems too far away. But there's no other prime position, maybe at $6, because then it's got this green candle. We're sort of pressing down. If we break the high of 591, for instance, you're probably going to have it grinding up. Then you might get caught, you get stopped out, find it goes to 610, and it starts to roll over again and really get belted. So you got a few things to decide there, Lauren, if you're still short on it. MQG. Now this one I don't like. See how you've had this pullback, a deep reaction back up again, and it comes straight back down. So this could be choppy. We may, and see how it reacted off. You always got to take note. You reacted off this inside level. Well, inside level, I mean, what the market's done, it's found, it's obviously found a bit of headwind up between, was it 100, 120, 128 to 130, so give or take 127, 130, so $3. It popped up here, fell over. I don't like the way this fell over quite. You can see over a couple of days it was really hard and fast. Then we've got this bit of a grind back up. We've got a lower high here, and that was the start of this leg pretty much down. So okay, that's your pullback. What's happened from here? You've popped up there, pressed down. It's only washed out a minor level, and then bang, straight back up. Took out this lower high. It's around $19. Took out this lower high. Now, what we'll be looking at here, you've got to look at two things. Is this all part, this little pop-up, is this all part of a secondary move down? So what you've got, that's your first move down and potentially your secondary move down. it takes you somewhere around, I don't know, $104, which, yes, you could short it, or are we starting to find a base at this, was it 112? This little minor, see the way it's just reacted off there? Now I'll drill in on that. So I think it's quite important. Little levels like that, it catches this at a very minor level at 112. It's reacted off there. So why would that just sort of fall short rather than continue on down to 110, for example, and really retest the lows? It is sort of retesting, but it's right smack with these sort of minor levels. A lot of times people, if you're short, you get caught out because you're not really watching these. It's only a minor level. We start getting some buying support off here. So it'd be interesting to see how this goes over the next couple of days, whether or not, we've got, say, this scenario, we're in the red, we've got the two legs down, we're starting to find a bit of a base. We're going to start find buying support at 112, or this is all part of that bigger move on the way down. And potentially you can short it through, what's the low of 100, say 111.65. Yeah, 111.65, where you stop just about around 116. You're not taking too much risk on that, and see if you can press down to sort of that, 104 zone. And it is part of this bigger secondary move lower. It's a bigger corrective price action for this overall move up. Is that making sense, guys? So all you're ever trying to do is just draw it up and trying to analyze. Now, I don't allocate a lot of emphasis to this being a big move down. I think only because I like the way it's sort of popping up. It has reacted off 112. I'm starting to see a bit of divergence there, which doesn't mean too much. I'm not big into that, but I know that's a major technical signal that people look at. The secondary move down to sort of those support zones at 110 to 112. It's running out of steam a bit earlier. It just means there's less sort of selling pressure pushing it down. They're struggling when they get into the lows to force it through. It's used up sort of any leftover selling pressure. In that respect, they're going to give up, and sooner or later, that's going to be sitting there hanging. And you might get some people buyers starting to edge back into the market. We don't know, of course, in saying all that, but these are just the scene. That's why I'm always happy. I'm happy to work off that level, to buy off that level. But I want to be seeing a high low to work off. And at the moment, we're not playing out from a high low. And just this little pop up, this green candle, and if it takes out this minor level, I don't call that a high low. I'd rather see it pop up, pull back, and then get a higher low that way. A decent one. It's pretty much you can't misinterpret. So in essence, for me, I would still be biased down just for now until it proves itself on the other side. But just all this price action we said is, there could be the very early signs of it starting to hold up around 112. But so there you go. Any questions there, guys? Is there anything else you want to take a look at before we potentially call it a day? What else have we got here? It's down 35. Let's just look at the intraday action. See, look at this sort of move down. We could be, see if we're going to hold up here. What did we say? It was grinding up. It was potentially going to make a high low here. What did I say that? Was that minute chart? Oh, it was way back here, wasn't it? I don't know. So anyway, we'll be interested to see now if we can hold 56.80. If the buyers can hold 56.80 and support it a bit. Otherwise, we're going to take out, I would expect, maybe today, maybe tomorrow, take out that low. There's going to be a bit more pressure coming over the next few days. Let's just wait and see, guys. So anyway, look, I'll call it a day there. If there's nothing else you want to look at, thank you very much for joining me. We'll be back in on Thursday at 12:30 again. If you've got any questions, like I say, feel free to send us an email to support@tradesetup.com.au. And I'll be happy to get back to you if there's any charts you want to take a look at. Just shoot them through, ask a couple of questions, and I'll reply. Otherwise, enjoy the next couple of days if you can. If you're sitting on the sidelines waiting, just keep on the sidelines. No hurry. And then we'll see how it goes and see what happens in the US tonight, the next couple of days. So if we get some buying pressure, see how it affects us too. It's always good to see, if the US is down, what are we doing? And especially what are we doing into the close? If we're going to start getting knocked on the head into the close, okay, that's maybe weakness is going to come over the next few days. But if we start to hold up into the close and we start bouncing a bit, that could be a different story. So we just have to interpret it as we go. Anyway, thanks for joining me. Like I said, if you did like the video, it'd be great if you can just leave us a like or help us spread the word. It'd be much appreciated. Otherwise, we'll be back in on Thursday. We'll see you then. Enjoy, guys. Speak to you later.